Hey, what's up guys? John here. What if I were to tell you there's a plan to rug pull the entire auto industry and values on vehicles will drop by 50 to 70%?
Inflation report showing new and used car prices keep falling.
News for used car buyers. New data indicates prices are now dropping after hitting historic highs in 2022.
Sounds extreme, but I'm going to show you the facts. I'm going to show you who's behind it. Some of those powerful corporations, some of the deepest pockets are all pulling the strings, and with it is going to go the value of many people's vehicles.
Industry experts expect prices for new and used vehicles will continue to drop a little bit more.
We're going to start to see a lot of people giving their cars up, repossessions. We're going to start seeing so much insanity. In fact, I believe it's going to be far worse than the 2008 recession, the housing crash, the great financial crisis was for housing, as this is going to be for the auto industry. I'm going to break it down for you. I'm going to show you the facts. Please hit the like button. YouTube will share this content. Educate the people about what's really going on. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Book a free strategy session by clicking the link in the description below this video. Now take a look at this. Auto loan interest rates are now at the highest since 2008, the great financial crisis. Meanwhile, auto loan serious delinquencies, which are 90 days late or more, are now at 2008 levels. The average interest rate on a new car has nearly doubled in just 1 year. The median payment on a new car, $740 a month. As rates continue to rise, expect auto loan delinquency rates to follow. Simply buying a car has never been more expensive. That's nothing. Look at this. So, you've heard of this UAW strike that's happening, right, impacting the auto industry. Well, what if I were to tell you that's all connected? A long and expanding strike will reduce the number of new cars on dealer lots, making it harder for people to repair their vehicles and reduce demand for parts needed to make new vehicles, meaning it's going to get more expensive to service these vehicles. And when you look at this article from CNBC, how EVs are upending the 100-year-old auto supply, they're already saying that that industry is going to get decimated by 44% from now until 2027. Revenues for internal combustion engines as well as fuel and exhaust systems are expected to decline 44%. 44%. Now here's where things get really interesting. Gas prices are $3.80 roughly a gallon. They say is a national average. If you live in a big city, it's a lot more than that. But the World Bank forecasts that the U.S. natural gas price could average $6 by 2024. Now, when you look at the World Bank and you look at what they're a part of and what they're saying is about to happen to the auto industry, it connects like this. It's absolutely insane. So the World Bank, and by the way, there's a lot of other big players here, so you can see they're all a part of it. You can see what's about to happen. All you have to do, you got the entire UK government. All they have to do is click on transportation, and it says right here, implementing restrictions on high polluting vehicles in a significant part of a city, signaling the end of petrol and diesel powered cars and trucks by promoting the use of zero emission alternatives. They're going to strangle people financially out of these combustion cars. That's what's going to happen. It's going to get way more expensive to fix them. It's going to get way more expensive to drive them. It's going to get way more expensive to insure them. Think I'm kidding. Car insurance rates just hit the highest annual jump in 47 years. 47 years, nearly half a century. This is only just the beginning of the pain that's going to be coming to the auto market. Why do car insurance rates keep getting higher? Wisconsin car insurance rates rose 38.9%. What happened? This is going to get absolutely crazy. When you look at what happened the last couple of years, 2020, 2021, free money everywhere. Free money. People are investing in JPEGs, making a killing. They're investing in stocks, crypto. People that had no idea what they were doing were just investing. They would think 20, 30% return in a month was normal. The free money, the easy money, all that is over. People are quitting jobs, taking new jobs at 20, 30, 40% pay bumps because the employer, they were able to pay it. But now as this all starts to change and the world gets more expensive, you're going to start seeing a lot of people walk away from their cars. This is only just the beginning. The average new car payment right now, $729. $729. Average used car, $528. But what is absolutely crazy is the price of a new car, $729, right? This used car price, the $528, that was how much a new car was in 2019. In 2019. So over the course of 4 years, you're paying more for a used car today than you were a new car then. right? So you're starting to look at this. This is not sustainable, yet real wages have fallen 3 years in a row. 3 years in a row. 1 in 6 Americans has a monthly car payment of over $1,000. This is just the car payment. Think about the insurance. That might be another $300 a month. That's $1,300. Maybe you fill the tank once a week. Maybe that's another $200 a month. $1,500 a month for a car, not including repairs, not including maintenance, not including oil changes or tires or anything like that. $1,500 a month, $18,000 a year. How is 1 in 6 Americans able to afford this? They're not. They're not going to be able to, especially as insurance continues to wreak havoc on their wallets. It's going to completely wreck a lot of people financially. Now, we're told this job market is going to be really strong. And, we have all this opportunity and nothing's going to happen. Well, U.S. jobless claims remain at historic lows, 209,000, right? Biden takes credit for easing inflation. But when you Google layoffs, you start to see a completely different picture. Looking at layoffs, this is, last 24 hours. It seems like every company is issuing layoffs, whether it be Facebook, whether it be any tech company. The oil and gas industry. You're looking at the auto industry. You're looking at Kaiser on strike, thinking of laying off 75,000 workers. You're looking at all these companies issuing layoffs. The reason that this jobs report is producing the numbers that it's producing, it's because it's designed to produce the numbers that it's producing. These aren't real numbers. More people today have 2 full-time jobs than ever before. Like, people are struggling financially. They're struggling in a very, very big way. And just as a context for that, if you go to layoffs.fyi and you look at layoffs so far just in the tech industry, 240,000 layoffs so far this year. Now, all of last year, 164,000. We will have twice the amount of layoffs by the end of this year as we did in all of last year, right? We're moving into a direction in this economy that I think many people are not yet ready for. If you look at what's going on with used cars, these used cars manufacturers, they know what's coming, and that's why they're panicking. These used car brands saw the biggest drop in value, right? New vehicle transportation prices declined further in September. Average new cars fall below 48,000 for the first time. Average price of new EVs dropped by almost 15,000 in a year. Why would they do that if there was demand, right? Elon Musk is cutting Tesla prices in the US again after poor Q3 sales, leaving bulls with no way to sugarcoat this. But there's this one big curveball in the economy that nobody's talking about that's about to happen that I think is going to be the straw that breaks the camel's back. And it's going to be student loans. 43.5 million Americans. 43.5 million Americans have to start making their payments October 1st. That was 10 days ago, 11 days ago. What does this mean? People are going to start making decisions. They had to start making decisions. Who's going to get paid? Who's not going to get paid? You look at where people are at financially. 2 in 3 Americans couldn't afford to cover $400 a month or $400 emergency, let alone the average payment of $503 monthly. How can they afford that? They're not. We're walking into default city. Landlords are going to get paid less. Credit card companies are going to start seeing more and more defaults. Auto loan defaults are going to continue to rise. People are going to prioritize their spending. They're going to feed themselves and their family first, and then they're going to see who else can get paid next. That's what's going to happen. And I think that the last person in line is going to be these luxury car manufacturers. That's why they're going to start and they're going to continue cutting prices. And as we walk into a world of uncertainty, what are we going to see? Opportunity in the auto industry. So if you're thinking about buying a car, wait a little bit, because most of the market is naive to actually what's going to happen. And so if you are positioning yourself, you're putting yourself in a strong place, you're going to be able to walk in and take advantage of opportunity. Now, I think this is going to be the curveball on top of this scenario. So if you look at how credit reporting agencies work and how these student loans are going to actually impact tens of millions of Americans, you're going to see that after 90 days, that's when these student loan companies, these lenders, are going to be able to file late payments. So starting January 1st, you're going to see millions and millions and millions of late payments and defaults and things like that occurring. And so when you start to see this, people are going to start disputing, trying to remove these negative items from their credit history because it's preventing them from refinancing their auto loan, getting a personal loan, putting themselves in a position to get access to money. So you're going to start seeing a lot of people start disputing items on their credit report. That's what I think is ultimately going to happen. So if you have a situation right now on your credit report, maybe you're thinking about buying a distressed real estate deal or a car, put yourself in the best position possible to get financing. We're going to see a wave of problems in this economy. You're going to want to put yourself in a position to be able to get money, get access to money, get access to credit. And I believe what's going to happen is starting January, February, March, we're going to see so many people disputing items that it's going to take a lot longer to get results because there's only so many people working in credit bureaus. If you have an influx of 1 million or 2 million people disputing items on the report, just imagine what that's going to mean for people that are actually trying to get items off their report. It's going to be a lag. That's my bet. What do you think about this entire situation? What do you think about the entire auto industry? If you need help fixing your credit, we'd love to help you, give you a free strategy session by clicking the link below in the description at greatcreditfast.com. That's greatcreditfast.com. Catch you guys in the next video.